All right. Well, thank you, Ruby, and thank you to Small Business BC for having us present today. Thank you to all the registered attendees for taking time out of your day to learn some new tools and resources to help your business grow. Hopefully you're enjoying this great event so far, and we look forward to talking a little bit more about Cashflow. My name is Andrew, Business Banking Advisor with Envision Financial, and with me is Sasha, a Commercial Banking Advisor with Envision Financial as well. Of course, COVID-19 has significantly affected all business, and we had to quickly learn how to adapt. While most businesses were trying to figure out how to keep your doors open or how to keep your employees employed, the cash flow of your business may have gotten forgotten about, and now you're wondering, how do I get back on track? Before we get started today, I'd like to share a little bit about Envision Financial and who we are. Envision Financial is a division of First West Credit Union, the third largest credit union in BC, with more than $14 billion in total assets and approximately 250,000 members. We are a financial cooperative, and we're all about the people working together to support one another and our communities. Our members empower us to put people before profits and work in their best interest. Staying true to our values, during COVID-19, we recognized that the hospitality industry was hit the hardest. Therefore, we developed programs to help small business owners working in that industry. Through our Get a Meal, Give a Meal, and our BC Hotel offers, we promoted exclusive member-only offers and discounts, which drove customers to our members' hotels and restaurants. First West Credit Union has committed over $285,000 in community investment dollars to organizations that are supporting COVID-19 relief efforts. This includes $220,000 in funding to local nonprofit and charitable partners, of which over $64,000 was in the Envision Financial region. Now, to begin our presentation, I'll turn it over to Sasha, and she'll tell you a little bit about cash flow, working capital, and liquidity for your business.
Hi everybody, my name is Sasha and I'm going to be talking about cash flow. So what is cash flow? Cash flow refers to the amount of cash that the company has paid out or received for a certain period of time. This could be a week, a month, or a year. In other words, money in and out of your business. Think of a cash flow as the picture of your business checking account over time. There is money coming in, mainly from customer sales. It could be from asset sale or shareholder loan, and money going out to pay expenses such as payroll, supplier bills, government taxes, loan payments, and others. Cash is important because it later becomes the payment for all things that matter in your business, the things that make your business run, expenses like materials, rent, payroll, and other operating expenses. Positive cash flow is preferred, and it means your business is running smoothly. It means you have enough cash on hand to meet your obligations. Positive cash flow indicates financial stability and flexibility of the business. Negative cash flow means that your business has more money going out than coming in. When in this position for a long time, your business is not profitable and might need a boost. For example, if your business has 15,000 invoices to pay in the next 5 days, but you have only 10,000 coming in from receivables for the same period, you will be short 5,000. In this situation, you either must use an operating line of credit to temporarily cover the shortfall or try to extend payment on some of the invoices. Consequently, perfect timing of your revenues and expenses is crucial for your business. All businesses go through periods of negative cash flow from time to time. However, it is not healthy when this becomes the permanent state of the business. Cash flow is a key indicator of your company's overall health. It is important to understand and remember, cash flow differs from profit. Cash flow is the amount of money flowing in and out of the business, while profit is the revenue remaining after deducting of all business costs. To truly understand how well your business is performing, you should be preparing a statement of cash flows regularly, at least quarterly, and separate the statement into 3 main types of cash flow. Cash flow from operating activities, which is funds from your products and services to customers, funds from your day-to-day operations. The second one will be cash flow from investing activities, which is long-term investments either in real estate or market or other financial instruments. And the third cash flow is from financing activities, money moving between the companies and its owners, investors, and creditors. Breaking out the different types of cash flow lets you easily see activities that are generating the most income and expenses for your business. You can then use this information to adjust your business strategies and plans. Working capital. Sorry, let me move the slide. So what is working capital? Working capital is cash flow available to the business at any given time. Once its responsibilities have been met. It is the difference between the company's current assets, such as cash, accounts receivables, and inventories, and its current liabilities, such as accounts payables. Working capital is the lifeblood of any healthy business and the difference between the success and the failure of your business. In most cases, to secure adequate working capital for daily operations, businesses need either an operating line of credit or a working capital loan. The main difference between these two is how you get the money and how and what you repay. With a loan, you receive a lump sum of money and repay it in steady monthly, bi-weekly, or weekly payments. Once the loan is repaid, if you need more money, you must reapply. On the other hand, a line of credit is a revolving account. You can borrow, repay, and borrow again without the need to be approved again. A line of credit offers more flexibility than a loan and allows for repeated usage of the approved limit. For example, retail businesses often experience a spike in sales during certain times of the year, such as the holiday season. Retailers need an increased amount of working capital to pay for the additional inventory and staff that will be needed for the high demand season. As a result, a retailer would likely see higher expenses in the off-season leading up to the holidays relative to the revenues. On the other hand, when sales are down in the off-season, the company would still need to pay for its normal staffing despite lower sales revenues. In both cases, the business owner can benefit from an operating line of credit. This line of credit can be utilized to temporarily cover the extra expenses and repaid with the sales revenue. Working capital helps businesses smooth out the gaps in revenue in the times of the year when the sales are slow. An operating line of credit in place is a great idea for all businesses, and my advice to you is apply for it when the business doesn't need it and is in good financial position to be approved for it. Liquidity is the business liquidity of the business shows how quickly the business owner can get his hands on cash when needed. What are liquid assets? Cash, savings, and checking account deposits are the most liquid assets as the business owner can use it immediately if needed. Assets like real estate, equipment, arts, vehicles, jewelries, and others are non-liquid assets as it will take time and efforts for the business owner to get the cash out of these assets. Can you be too liquid? While having quick cash on hand is good for the business, excess liquidity is not a good thing. It represents cash that could have been invested to generate income, therefore lost profit opportunities. In order to keep business moving and stay afloat, you need working capital. That is where cash flow and liquidity comes in. Cash flow and working capital are not the same thing. Cash flow refers to cash in hand in and out of the business during a specific time frame, where working capital refers to the difference between all current business assets, such as accounts receivables, inventory, and cash, and current liabilities due in 12 months period. Working capital is a metric used to measure companies' liquidity or its ability to generate cash to pay for its short-term financial obligations. Managing cash flow is all about perfectly timing your revenues and expenses. And in the next slides, Andrew will give you some great tips on how to manage your business cash flow.
Thank you, Sasha. As she said, cash flow is often misunderstood. It isn't about how much money the business makes. It's more about how much the money is flowing through the business at a given time. Cash flow and liquidity are important drivers behind a business day-to-day operations and its overall contingency plan. For a business owner, this is even more evident during an economic downturn whereby the entire economy is suffering together. There's a sudden decrease in demand, sales plummet, and supply chains are disrupted. The big question is, how do you cope? Each business is unique and faces different challenges. These next few slides, we've outlined some great tips to help you manage your cash flow. We find that many of these tips will help your business regardless of difficult times or not. The first tip we want to mention is invoice quickly. When you're negotiating with a customer, clearly state the payment terms and confirm the right person to send your invoices to in order to get it processed ASAP. Collecting your accounts receivables as fast as you can will help guarantee sufficient cash flow to the business. This also goes for your accounts payable. The faster you process an invoice you receive, the quicker you know what your true cash flow will look like. That being said, make sure your quick invoicing is also efficient to minimize errors, as an error can cost just as much as slow invoicing. For example, say you set payment terms for 30 days, but you take 15 days to invoice the customer. You are now potentially waiting 45 days total to hopefully get paid. The extra 15 days could affect your cash flow to start the next job or purchase more inventory. The next point we want to make is use your credit strategically. There are times when you need to lean on some form of credit to get through a low cash flow period. In cases like these, don't fear credit. It can allow your flexibility to get things done in order to keep business moving. It is vital to secure an operating line of credit when a business doesn't need the credit but can qualify for it. The line of credit can be utilized during difficult times and ongoing. Another form of short-term credit is credit cards. Although the interest rate is higher than most credit products, this could be the difference of being able to move on to the next job or fulfill that next order. When you apply for a credit card, try and source one with rewards. Reward points can easily be converted into cash back. For example, our Platinum MasterCard offers 2% cash back. That means every $5,000 that you spend puts $100 back into your pocket. When you're looking to finance equipment, vehicles, or renovations, you have to look at a long-term loan that you can manage over a long period of time at a lower interest rate and a better manageable payment. The next point here is stay on top of your finances. Many business owners are too busy with the business to monitor their finances as well. We find that many business owners also may not be comfortable with the numbers side and therefore procrastinate updating vital information. If you're not able to keep an eye on your books, consider hiring a bookkeeper or an accountant to do it for you. This can be at an extra expense. However, in the long run, will save you money and problems. Alternatively, there are bookkeeping programs that you can use, such as QuickBooks. This will tremendously help you stay organized with your finances. Price for profit. If you consistently struggle with positive cash flow, ask yourself, am I charging enough for my products and services? Be sure you're not only covering your costs of doing business, but that the margins include making a profit. Another good tip is to focus on higher margin products and services so that your business converts resources to higher revenues. One thing we always say to our members is to know your competition and make sure you're not priced too low or too high. Remember that your time is just as valuable as your customers. For example, think of the last time you took your vehicle to a mechanic. Typically, they charge you their hourly rate just to diagnose or quote the service. Eliminating difficult customers. If you have a hard time collecting receivables from a customer or he is difficult to satisfy, disconnect with that customer. You may be wasting too much time on one customer instead of acquiring more business. This is a tip that can be hard to accomplish, but there are many ways that you can do it without having a lengthy, unpleasant conversation. For example, you can look at your pricing and maybe you quote this member a higher rate. We find that in most cases, there is some form of competition offering the same services as you, but at a much higher cost. If you use this strategy, make sure you have an alternative for the customer. This could be referring their business to a different supplier or company. Try to think of a newer company within your industry that is eager to take on all new business. Whatever you do, try and leave the difficult customer on good terms. The last point we want to make is learn to juggle. Monitoring your cash flow is more like juggling. At any given time, some balls are in the air, some are in your hand, but the goal isn't to have all the balls in your hand. The goal is to know where the balls are at all times. Same goes for your cash flow. Make sure your payments are timed right with your receivables and monitor where everything stands at any given time. Again, it is a good idea to have someone else monitor these for you so you can concentrate on building your business without slowing down operations. Now, I'll hand it back to Sasha, where she'll introduce some great cost-saving strategies.
Okay. So, regardless of the time, before, during, or post-pandemic, every business needs to implement cost-saving strategies in order to operate as leanly as possible and achieve higher profits. Now, more than ever before, businesses need to focus on cost reduction and staying cash flow positive. How you can save on business expenses? Start by analyzing your supply chain. Look at the list of suppliers, connect with them. Look at the list of suppliers, connect with them, and try to negotiate better terms, including quality, payment terms, and volumes. Remember, unless it is clearly stated in a binding contract that it is not, prices are always negotiable. For example, if you're buying 10 laptops, you will likely qualify for a volume discount. However, you have to ask for it. Look around your workspace and try to reduce or eliminate some of it. Office space could be a significant overhead, one of the largest business expenses. COVID-19 has forced businesses to move many employees to working from home and set up remote access. For positions that allow it, consider making remote working your new normal. If you feel you need physical space, at least try to downsize or share some of your excess space, rent it out to some other business or to an individual to share the cost. Many businesses have monthly subscriptions for newspapers or magazines. Cancel any non-essential monthly subscriptions or at least limit them to the bare minimum. In order to reduce your office supplies expense, consider large discount suppliers like Walmart or Amazon. They can often beat traditional office supplies vendors' prices. Cut on business travel expenses. Virtual meetings will help minimize travel expenses. While we certainly don't want to eliminate personal contact altogether, save it for instances when it is most beneficial. An overall reduction in overtime will ease worker stress. An overall reduction in overtime will ease worker stress and lower your expenses. Cut back on meetings and allow flexible work schedules for your employees to minimize overtime. Studies have shown that people who work more than 55 hours a week have a high chance of facing health problems such as high blood pressure, injuries, and mental problems. Overtime decreases productivity, destroys work-life balance of your employees, and opens your business to liability issues. Another way to keep more money in your pocket is to pay invoices early. Many vendors offer small but meaningful discounts for fast payments. For instance, a vendor that can knock off 2% of the invoice total if you pay within the first 10 days instead of the usual 30. That arrangement is represented as 210 net 30. As long as paying early doesn't affect your cash flow negatively, it usually makes financial sense to do so. It is even more true today in this low interest environment where the cost of short-term borrowings is unlikely to exceed the discount. Opposite to this strategy, if you're experiencing cash flow problems, you can ask the vendors to extend the payment terms. That will give you time to collect your receivables and be ready for the payment. Avoid non-essential power usage after hours. This is painfully straightforward way to reduce your electricity bill without affecting operations. Ask your staff to turn off their computers, desk, and overhead lights at the end of the day before heading out. Leverage social media advertising. Traditional advertising is very expensive. Paid social media advertising is much cheaper, and if you devote time and personnel to engaging your company's fans and building your social following organically, you can reach thousands of current and prospective customers without paying a dime. Cancel or delay improvement projects. When you look to preserve cash, projects can wait or get canceled altogether. Analyze your current business situation, finalize the direction your business is going, and then modify the improvement projects accordingly. If your business entered lease contracts when purchasing equipment or vehicles, review your existing contracts. You can return or renegotiate payments for unused leased equipment, including vehicles. Some equipment might go unused because employees are working from home now. Others might have been leased with good intentions, but rarely used. It is a great cost-saving idea to partner with other companies to reduce marketing expenses without limiting exposure. For example, partner with another business to send a deal postcard or coupon flyer to every resident in the area. Each business gets promotional spot at a fraction of the cost of an independent mailing. Before cutting costs, companies should create cash flow projections to identify how much they need to save to survive in this pandemic or to run a lean and profitable business at any other times. These strategies are perfect short-term solutions. However, for the business to emerge from crisis profitably, company leaders need to start working on structural performance improvement or even transformational programs leading to more sustainable solutions. Business owners must think of a clear target picture for the company during the next 3 to 5 years, how the business will look like, what would be an operating model, profitability targets, etc. To support small business owners during these difficult times, our government developed many relief programs, and in the next slide, Andrew will be highlighting some of them for you.
Thank you, Sasha. Again, like Sasha said, these are a few of the government programs of a long list that you may be able to qualify for. There are many more available, which can be found on the BC government website, and we highly suggest you look through each one to see what you qualify for. The first program we want to highlight is the Canada Emergency Business Account, also known as CEBA. This provides interest-free loans up to $40,000 to eligible small businesses and not-for-profits, which includes loan forgiveness of up to 25% or $10,000 if repaid on December 31st, 2022. Recently, CEBA expanded to allow more small businesses to apply, including sole proprietorships and family-owned corporations that pay employees through dividends opposed to payroll. Since the start of COVID, CEBA has funded over $29 billion in CEBA loans, which amounts to over 745,000 businesses that have received help from this program. If you have not applied for CEBA yet, I would highly suggest contacting your primary financial institution to find out more of the requirements and where you can apply. The next program is the Canada Emergency Commercial Rent Assistance. This program offers forgivable loans to eligible commercial property owners to help reduce rents in the months of April, May, June, July, August, and September by at least 75% for qualifying small business tenants. The primary goal for this, as you heard, is for commercial owners to provide rent relief quickly to impacted small businesses. The breakdown for the rent is designed to look like this. 50% will be covered by the CECRA program, 25% by the tenant, and 25% forgiven by the property owner. The next program is the Canada Emergency Wage Subsidy. Any Canadian employers who have seen a drop in revenue due to COVID-19 may be eligible for a subsidy to cover part of your employee wages, retroactive to March 15th, 2020. The subsidy is designed to enable you to rehire workers or further prevent job loss and ease you back into normal operations. To apply for this program, you should visit your CRA My Business Account portal, and this offer lasts until December 19th, 2020. The last one that we want to highlight today is the deferral of federal and provincial taxes. Federally, the CRA has allowed tax deferrals until September 30th, 2020 for the payment of any income tax that becomes owing on or after March 18th to September 20th. To learn more about this, you can request a phone call from a CRA liaison to better undertax your tax obligations without tax consequences. At a provincial level, there are many taxes that have allowed deferrals as well, such as provincial sales tax, carbon tax, motor fuel tax, and tobacco tax, if applicable. Again, these were just a couple of the government programs that are offered to you. There are many more that can be found on the BC government website under the COVID-19 relief tab. And that concludes our presentation today. So thank you for your time and your attention. And we hope that you found this helpful, resourceful, and would love to answer any more questions that you may have.
Thank you, Sasha and Andrew, for your presentation today. It was definitely very, very informative. And just FYI for everyone tuning in, we have around 120 currently. Envision does have a virtual expo booth. They are also having a raffle draw for an espresso machine and a wine basket. I wish I can enter. So please go check them out, as well as if you have any additional questions or inquiries on the resources. We have quite a few Q&As. So many thank yous rolling in. We have quite a few Q&As, so I'm going to just facilitate that if that's all right with you, Andrew and Sasha.
Sure.
So Sharon's asking, do you have a department to loan money to people who has no business experience? Thank you.
Yeah.
Yes. Hi. So yes, we have two departments. People who are just starting their business, they're new to new business owner. They can definitely come to our business banking team, and we can sit down, review exactly what is the need at the moment. If they need money to purchase the business, if they need what exactly do they need, but they have to come prepared with a business plan. What's their idea? What are they buying? How do they envision the business within the next few years? How many employees? Where would be the location and stuff like that? And then, of course, cash flow projections, at least for 12 months. And then we can definitely design a package for them, which will get them started on from the bank standpoint, and then we'll help them through to establish their business.
Okay, great, thank you. So Kelly is asking, Sasha, what is that third kind of quarterly cash flow statements again? Sorry, she missed it.
So when you to see how your cash flow is over the year, you have to prepare a cash flow statement, and then there are three portions of the cash flow statement. The first one is from operating activities, which is your daily transactions with customers. The second one is from financing activities, like everything that you invest, sorry, I just lost my train of thought, but everything that you, all the income that you earn from your cash that you invest, and then these three portions will give you the details how your business is performing, what's the cash flow that's coming in and coming out, and what are the biggest expenses that you're having. So cash flow, the cash flow statement has three portions: from operating activities, from investing activities, and from financing activities.
Okay, great, thank you.
But if you need more information, I can definitely email it to you, or if you give me your phone number, I can definitely give you a call and explain.
Yeah, and also visit Envision's booth. They have experts over there who can, and actually Andrew and Sasha will be there as well throughout the day to answer any questions you may have. Ronald's asking, and I know a lot of people are thinking this, do you have or can I get a copy of the slides after the presentation? So with our formal presentations today, which is the first one from WorkSafe BC on COVID-19, FYIs, as well as Envision financials, managing cash flow, and market research that we're going to have at the end of the day. These slides will be uploaded at the virtual expo booth, so please check that out. Okay. Thank you, Ronald. So I can't pronounce this name. I'm going to try my best to pronounce this individual's name. Is Adrine, asking what could be the best way to create cash flow for a small business that has been growing during COVID-19?
Well, the best thing is to collect your receivables very quickly. So as soon as you finish the job, depending on your business, but as soon as you finish the job, you have to receive the payment either on the day or maybe within a week later, because that will give you sufficient cash to run your business. And the other thing could be just negotiate with your tenant if you're renting space, maybe to kind of wait for you for a couple weeks for the rental payment. Again, don't go into too much marketing. Maybe sometimes marketing could get really expensive, so maybe use more social media, Facebook, like create a Facebook page for your advertisement, and then go on Instagram, use Instagram for advertising. What else could be?
Definitely, you could look at too. I know the financing. You know, if your business is still operational, we're still open for business in the lending side. So you can always look at getting a working capital loan, which, like Sasha said, if you're having a harder time to receive your accounts receivables, then again, that working capital line of credit could definitely help you get to that next job or purchase more inventory.
And for small businesses, actually, lines of credit are our sweet spot. Like technically, they're based on the personal network of the business owners and their credit history, their repayment character. So even if it's a new business, we can definitely base it on your past experience as a payer, and then that will give you some good start for the business cash flow.
Okay, great. So I think we're going to have one last question. Thank you everyone for the questions. If you have any question after this session, main presentation ends, please meet Sasha and Andrew in the breakout room. You can find that in the menu bar. And there will be a 15-minute up close and personal time for you to ask your questions. Fernanda is asking any suggestions on how nonprofits can become self-sufficient?
That's a great question. Definitely challenging, especially with COVID, depending on what the nonprofit is. But definitely utilize your social media platform for that nonprofit. I know I just recently attended a nonprofit event that was all virtual. So again, it was something along the lines of this, where we were able to get together for an event that we couldn't meet in person. So again, just utilize your social media and try to make your not-for-profit just as big as it would be if, you know, COVID wasn't a thing right now. So do you have any other tips, Sasha?
No,
It's definitely challenging.
Yeah.
Because, you know, small business BC is also a not-for-profit. So, you know, right now it's really about, you know, looking at the present, being positive, and exactly what Andrew said. And if you want to have further discussion, join them in the breakout room after. So I want to thank you all so much for attending this session. And right after this, at 12:15, we will have our long-awaited panel discussion with Vessi Spadosier, Freshworks Studios, as well as Wildwind Botanicals, moderated by Cardi Cunningham of Big Bold Brand. So yeah, hope to see you all here at 12:15 and see you guys at the breakout room as well. Have a nice day.
Thank you.
Thank you.
Thank you.